Now, Victor,
Alright,
what
sir.
do you think this type of market structure is? Just look at it generally.
Is a downtrend?
Yes, it's a downtrending market generally, as coming down
Yes,
from
sir.
the monthly time frame. You can see right from here, the market has been selling. It has been creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. This has been the movement, right?
Yes.
But what
Yes, sir.
happened now is, let's go to the line chart so that we can do drawings better. You can see what happened is the market was coming down like this, and we consolidated over here for, let me say, 2 years or 1.5 years. We consolidated here like this, in this zone. Although a monthly consolidation is big, you definitely be looking for your moves and all that you get. But this is a consolidation over
Yes.
here. It has been consolidating since 2020. And the recent break was just this 2023. If I'm correct, let me actually check. Yes, the recent break
Yeah,
was
it
just
should
this
be.
December. You can see. So looking at the market structure from this line chart, you can always reference to the line chart, Victor. It will always help you in explaining
Okay.
your things. Just look. Downtrending market consolidation. And what happened? The market tapped into where? The market went up and tapped into where?
The zone.
Can you see this?
The supply zone.
Yes, the supply zone, the monthly supply zone. So this was the movement. Something like this. And this was the supply zone. The market now tapped into this zone. Now, most likely for this, we are going to expect a big move from this zone. Why? For the amount of liquidity that was generated over here for years, not even a year. Look at this. There's a possibility that this market is really, really going to pull up down.
Yeah.
All in all. So from the monthly time frame, what do you have? Your idea now is at the monthly time frame, you have tapped into what? A supply zone. And when the market is in a supply zone, what do you want to do? You want to look for selling opportunities, most likely, right? So what you do now, we have already tapped into the zone. But for now, we are sell buyers. But your sell buyers will be, will be confirmed as relative to what you see on the lower time frame. Because you can decide to go to the lower time frame and you'll be seeing the market still going up like this.
Yeah. Yes.
So that is it. So you work as you're going down to the lower time frame. For now, we are sell buyers. So let's go to the weekly time frame. The idea now is we are in a what? Monthly supply zone. So on the weekly time frame, you can see from that zone, the market got into the zone, and what happened? The market sold off for 2 weeks. You can see these 2 red candles over here. Okay, the market sold off for 2 weeks. So now, this selling off now, we are on the weekly time frame. We cannot really work much with the weekly time frame. So the idea now is, you doing this top-down analysis now, you want to go to the lower time frame, the daily time frame, H4 and H1, to see if you are going to see a change of character, a break of market structure. Now, there's what we call the Dow Theory, the Dow's theory. You get? Dow's theory states that the market will keep going up, the market will keep being in an uptrend until there is a preceding structure break. That means the market will keep on going up until a recent structure is broken. Only when that structure is broken, that is when we can start anticipating for what? For selling moves.
For sell. Like a change of character.
Yes. Only when this change of character happens, that is when you can do what? Start anticipating for sales. And similarly for the other side, the market will keep on going down until there's a what? Preceding structure break. Then you can start what? Anticipating for buys. So this is the basic idea. If the market should tap into this monthly supply zone, surely you're not going to look for a change of character on M15 or something like that. The time frame is too low compared to the kind of zone we tapped into. Yes. So you want to concentrate on zones like maybe the daily time frame, the H4, and possibly H1. So now what do we want to do now? We are sell buyers at the moment. But the basic idea is, remember, from the Dow theory, there is no break of structure we are seeing at the moment. So the idea now is what? The market has been going up. So now your idea is, if the market comes back into this zone, you want to do what? You want to buy. But how is the market going to come into the zone?
Buy.
It has to sell to come into that zone, right?
Sell.
Yes, it has to sell to come into that zone. So anticipatedly now, you want to sell. And you're expecting a selling move also. Because this zone is like a kind of magnet that is going to attract this market to come deep into it and then go up, right? And basically, we know this is the weekly time frame, Victor. We cannot wait all weeks, for the market to come tap into this zone before going up. It's going to take a lot of time. Right? So what do you do? You go to the daily time frame. Yes. You go to the daily time frame. Now on the daily time frame, what do you have? You can see in the zone, the market tapped into the zone and sold off. The market condition over here is not too clear. So we want to go to the H4 time frame to see what is happening inside the zone. What happened here? We want to get a clearer view. Okay? And you should always understand, Victor, whenever you are doing your analysis and the chart does not look too clear, you should understand that you are on the wrong time frame. Okay? That means you have to, you have to re-strategize. You have to move to another time frame. One thing with these time frames is, if one time frame is not clear, among all the time frames, one has to be clear. It has to give you information more than the other charts. So that is why you really need to know how to be flexible when moving around these charts. These are time frames. Okay? So as you know, this one, as I said, is not too clear over here. This structure over here, right, is not too clear. We just know the market tapped and started moving down for some moment. So now what do? We go to the H4 time frame. Now on the H4 time frame, you can see it's more clear. Look at this. And this is the big zone the market tapped into. Can you see the zone? The monthly zone. So now when the market tapped into this zone, what happened? Let's dissect what was happening. The market, it got into the zone, right? Was moving in an uptrending fashion. And then suddenly what happened? Boom.
It changed character.
Yes, change of character over here. Market structure has been broken. Dow theory. Market will keep on being in an uptrend until there's a preceding structure break. Now that structure break, we have seen it. We have a change of character. Okay? So you are now expecting possibly the market can start selling down. Because you should understand something. Sometimes change of character can just be maybe for continuation or all that. It can just maybe decide to take out liquidity, tap into another zone and continue moving up. So for your change of character, you see, I don't know, do you know of what an imbalance is?
No.
Okay, I'm going to explain. Right?
But I heard of FVG.
Yeah, it's fair value gap. It's all the same thing we call it. You can call it imbalance or fair value gap. It's all the same. So basically, what you have over here, Victor, the market has changed character, right? And you can see the movement was impulsive. You should understand this movement, this big movement you are seeing, this big candle, the way the market pushed out of that zone. That candle is not for fashion. It's not for fashion. When you're doing your analysis, you have to be reading what we call price action. Price action is slightly different from your analysis. It's just reading the way the market is moving, you get, or is rejecting from a zone. You really have to put that, in your analysis also. Now you can see this movement. Suddenly, what happened? The change of character and what? Impulsive.
Push.
So this impulsive candle now it speaks volumes. Now, this impulsiveness left an imbalance. What is an imbalance? An imbalance, is a gap between candles. Now the market is selling. Let me give you an example. Market is selling. Okay. So look at this, Victor. Can you see this gap over here?
I can see it.
The gap between
I
these
can
two
see it.
opposite candles. The gap between these two opposite candles is an imbalance. And what happens? The market will always come and fill this zone. The market will always come and fill it. It's just like the market is designed, to be filling imbalances. If the market leaves an imbalance, you should know one day or the other that market is surely coming to fill that zone. So that is the basic idea of an imbalance. You get? And look at what we have over here. I believe you can see that gap. See. Can you see it?
Oh, yeah. I can see it.
On a normal day, if the market is balanced, how it's going to be moving? A balanced market is always moving like this. Now, this is when they say the market is efficient. There's no gap. Can you see this?
Yeah.
But when there's a gap, we say we have an imbalance.
Okay.
All right. So this imbalance now, it really defines what an order block is. Whenever you see an imbalance in your key point of interest or coming out from your key point of interest, it speaks volume about that area. Okay. Now it indicates, high probability of your zone going to play out if you use it the right way. It's a property that can make your zone what? Highly probable zone. So what is the first thing now, Victor? This is the first property of what we are looking for in our zone, imbalance.
All right.
Okay? Whenever you're doing your markup, you want to see an imbalance coming out from your zone, possibly. You get? So this is the first property. Now let's keep on analyzing. I'm going to discuss the properties as we are analyzing, okay? So now look, the market is going down. We had the break of structure over here, right? And it was impulsive. So now what happened? As that break of structure occurred over here, right? What happened? The market moved down a little bit and it came, tapped into that zone that caused the break of structure, the change of character. And what happened? The market sold off impulsively. You can see this selling off was not a minor sell-off. Can you see the way the candles moved away when the market tapped into the zone? See the movement. Look at these candles. Can you see how the market moved away from the zone? Are you with me, Victor?
Yeah.
So can you see the way the market moved away from the zone? Where did the market move from? The market moved from that zone that caused the change of character. Boom.
I can't hear you clearly.
I think it's your network, actually. Can you hear me now?
Yeah.
It's like there's a little bit of network issue, but I can...
Yeah, it's okay now. I can hear you now.
Okay. So you can see where the market rejected from. This zone that caused the change of character. Yeah. The market tapped into the zone and what? It sold off impulsively. What did I say? It sold off impulsively. Impulsively. Now this impulse is not for fashion. It speaks volumes. Impulsive candle movement always indicates, there are a lot of suppliers in that zone. There's a lot of supply being emitted from that zone. So in that situation, you'd want to do what? When the market can come back into that zone, you want to take advantage of the supply in that zone and do what? And you want to sell from there, right?